Let's break down a Google put that runs out till September 2026. I'll show you how I use Vega, the AI tool inside Webull, to analyze the trade. Then we'll go through the technicals and how I structure the position. And I'll also explain what would make me exit this trade early, even if the AI still likes it. Here's what Vega is saying. Number one, AI-powered monetization under regulatory scrutiny. So Alphabet, also known as Google, is facing a new EU antitrust investigation into how it prices search ads that rely on its AI tools. Okay, so they're overcharging for the ads that rely on the AI tools. These actions focus on Alphabet's AI-powered monetization and could affect how it deploys AI across search and advertising. Regulatory bodies in both the EU and US are questioning how Google prices AI-powered search ads, which could lead to tighter rules on key monetization channels. Which could also impact YouTube. That's interesting. So, Senator Elizabeth Warren has also opened a probe into whether Google's Gemini AI integration could lead to consumer manipulation and privacy issues. The regulatory scrutiny challenges the narrative that AI-driven features simply expand monetization, as new rules could limit pricing flexibility or require product changes affecting margins. So if they force them to, let's say, pay creators more money or anything along those lines, that could impact the profit margins, which could ultimately lower the attraction of investors and hence the share price. All right, number two, significant investment in AI infrastructure. Alphabet issued $32 billion in new debt to fund its AI plans and continue its massive spending spree on AI infrastructure. This includes $20 billion in US dollar denominated bonds and $20 billion in bonds denominated in sterling and Swiss francs, with a rare 100-year note in the sterling offering. Alphabet plans to spend between $175 billion and $185 billion this year on its AI build-out of massive cloud computing data centers, which is double what it spent last year. So all of these news headlines so far are talking about how Google is making a huge investment in the AI, is facing some scrutiny from regulatory bodies, and that the amount of money that it's investing is twice as much as it did in previous years. All of this could be contributing to why we are seeing such a huge price fall. The 52-week high was $350, which happened a few weeks ago, and now we are down $44 to $306 going into the third week of February. The 52-week low is $142. Now, that gap up, or move up, should I say, was very profitable for a lot of people who were sitting in calls down here at the 306 level. Okay, on this particular date. Let's go back to the hourly. So what date is this? What is the date of this candle? This is February 5th. All right, February 5th, the low was 306. So it was down here on February 6th to 306.92. And then we shot all the way up to 326 and it closed at 317. All right, so then we got the 5th. Oh, I'm sorry, let me rephrase that. This candle opened, this 1 hour candle. So in an hour, we saw a $20 move from the low to the high. All right, so you see right here where it shows you the low of this candle was 306.92 and the high was 326.55. So we did that, we moved up. All right, so here we gapped down. We gapped down all the way to 306. We were at 333.34, and then the next day it gapped all the way down as far as 306.92. So we call that a gap, snap, and crap. All right, so it gapped down here, snapped all the way back to the 21 period moving average at 332.64, and then this is what they call crapping. It drops it pooped basically from 332.64 all the way down to 306.02. All right, so that's a gap, snap, and a crap. So now we're trying to figure out where the bottom is, so we can enter this trade either anticipating it to continue down, which the bad news is suggesting that it may continue to the downside, or we can anticipate this being the bottom and a retracement back to a previous level of resistance. Okay, so on the hourly time frame, it looks like we could be either in the second leg of a move down, so there may be another move, a third leg down, or we could see potentially a retracement back to 328, and then a rejection at that point. So we are looking to see, are we going to have and see, here you are on the daily time frame showing you something similar. This thing, it can come down to about halfway between the 50 period moving average and the 200 period moving average, and then go back up to retest the 50 somewhere around 320 to 325, and then continue all the way back down to the 200 period moving average, which by that time may be somewhere around this 260 mark. All right, so 260 to 280. If you are uncertain, you may want to just sit out and wait for this thing to come down. However, I'm already in this trade. I got in right at 330, and we caught a put all the way down in 2 contracts. We came down, I took a 20% return, had a pullback, I added. Now we're down to about 303, 2 contracts, and we're up 40%. So I'm going to take profit tomorrow on the 40% and let the third contract run, and I'm going to bring my stop limit order to break even. So once I make those moves tomorrow, I will be in profit, and there will be no way for me to lose on this play. All right, because I took profit at 20%, 40%, and brought my stop loss up to break even. And if we pull back to my entry price or shortly above it, I'm going to add an additional contract, and we're going to rinse and repeat this thing all the way through September 2026, which is the expiration date on this particular option. All right, so I hope that was helpful. Peace and love, and I hope you get rich. I'll see you in the next video.